I'm Owen Bigland. This is the Inside Edge video blog. Okay, it's been a few years since I've revisited my golden rules of real estate, the foundation of what I've come up with for successful real estate owning, holding, or investing, either as your principal residence or as an investment property, buying a property, putting a tenant in and hanging on to it. So let me just refresh you guys on this. I talk about this in my book and I brushed on this. It's been a few years though. Because I had a guy, and I get this quite a bit, says he's been saving for the down payment, wants to get into a detached home. Of course, the prices have run away on him. And he's wondering now, well, maybe should I, settle for less home, maybe buy a duplex or a townhome, or should I wait for a correction for the detached prices to come down and then buy? Well, in my opinion, I've often said here, the best time to buy a home, I think it was yesterday. The second best time is today. Trying to time a market and hoping for a market crash that may or may not happen, that's a bit of a fool's errand, in my opinion. I would suggest to him that if he's pre-approved, which he is, he sounds like for a certain level, not to where he wants for the detached, then I would lower your expectations here and get in the market. Buy a good quality townhouse, buy a duplex perhaps, or maybe even just a good condo. Get in the market now, stop renting. You're in the market now, you're creating equity two ways. Over the long term, you should get some nice appreciation on that home. You're paying down the debt at sub 2% interest rates, and you're getting that principal residence exemption, tax-free growth. Now you're in the market and at least you're riding it up. You could always continue to save your money, invest it down the road, perhaps sell that property and move up to a detached down the road. But let's just refresh my golden rules of real estate. This is something that my father instilled in me and my brother 35 years ago when we were getting ready to buy our first condos. You never want to buy real estate, or you always want to have at least an 8 to 10 year holding period when you buy real estate, whether that's your principal residence or you're going to be an investor. Now, fantastic things can happen right from day one. You can buy a condo or a detached house, and in 2 years, you're up $200,000 on it. That's great. 50% of it's like a coin toss. I've said many times on my blog here, half the properties I bought over the year have gone up right from day one, and I've never been underwater. The other 50% have gone up for a bit, maybe come down. After 3 or 4 years, maybe it's worth $20,000 less than what I paid for it. But what I can tell you that by holding it 8 to 10 years, that will pretty much always guarantee a positive return on it, because you've chipped off at least a nice chunk of principal off that from the payments over the last 10 years. But anything can happen in the short term. Markets go up, markets go down. Market could go on a rip here and go up 15% over the next 12 months. The market could quite easily go down 10 or 15% here over the next year or so. Who knows? Who cares? You're buying your principal residence, you need a roof over your head. It certainly beats renting. But you should always have at least an 8 to 10 year holding period. That will solve all your problems. And again, home ownership and a roof over your head is a lifelong need. You're going to need that house for 20 or 30 or 40 years until they take you to the old folks' home. But if you can't hold, and the other final thing too, of course, with real estate I've said, is the friction costs. Real estate is incredibly expensive to get in and get out of. It's probably the most expensive. Maybe art, buying and selling art with the auction houses might be more expensive. I know they take a pretty good commission, but buying real estate is extremely expensive to get in and out of. You've got the PTT, which is the biggest tax grab going. You've got conveyance costs. If it's an investment property, when you sell it, you've got capital gains tax. Then you've got real estate commissions and another set of conveyancing fees. You may, if it's a brand new home, have 5% GST on that. So 8 to 10 year holding period. If you cannot commit to 8 to 10 years, then you have to have a backup plan. So in other words, if you buy the home, 5 years from now, you get transferred to Toronto. If the market is in the doldrums, and let's say it's a buyer's market, and you're down 20K on the condo, rather than have to sell it at a loss, what I would suggest you do is have a plan B. Put a tenant in it, rent it for a year or 2 or 3 until the market recovers, which it always will, and then sell it at a profit. That is my rule number 1 and 2 with the golden rule. The other thing is take advantage of the principal resident exemption, the only true tax shelter we get. RSPs are great. You get the deduction going in. It's tax sheltered growth. But of course, when you pull an RSP out, start drawing it down in retirement, it's taxed at your full marginal rate. Real estate is 100% tax-free in and out. You buy a condo today for $500K. 20 years from now, you sell it for $1 million. That $1 million or that $500,000 comes out completely tax-free. Follow those rules and you will do fine in real estate. Trying to time markets and speculate short term, it's a mug's game. I would say at these current interest rates, and if you're currently renting and your situation is you're paying $2,100 or $2,200 a month market rent, I would become an owner. Get into the market, take advantage of the principal resident exemption, take advantage of these low interest rates, start creating equity two ways, paying down the debt, and price appreciation over time. But just make sure you can commit to it. Real estate is a long-term commitment. 8 to 10 years minimum, but hopefully much longer than that. When I buy an investment unit, my goal is to hang on to that until my tenant pays down my mortgage. I seldom sell. As I've said, the odd time I have sold some of my personal real estate is usually to consolidate, to buy something else, or buy multiple properties. But the friction costs will kill you on real estate buying and selling. Best to just buy it, sit on your hands, enjoy the home, pay it down, or if it's an investment unit, let the tenants do all that heavy lifting. It's such a simple formula, but we are bombarded now with always having to fiddle and do something. And it's the same thing with your stock portfolio. Buy the S&P 500, buy the VIG, buy the XIC, the TSX index, put money in it every month and just sit on your hands. Let compounding and time do the heavy lifting and then enjoy your life. All that time you spend on analyzing markets and whether they're going to go up and down and listening to these moron predictors and amateur economists tell you where the market's going to go, it's all a giant waste of time. I pay zero attention to it. I let my investments do their thing, let them ride, and then I go about my daily life improving myself, getting better at my career, earning more money, getting enough sleep, working out, staying in shape, spending time with my family. That's what you should be doing as opposed to analyzing markets and where they're going to go here or there, because nobody knows. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.